Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance they struck down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the red. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance based drawdown, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and the impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision, we are the flow.
Hello and welcome everybody to Tuesday's Live session at Seacrest Markets. What a day yesterday was. How was everyone doing? How did everyone trade yesterday? Did anyone take some wins, some losses off the table? Or did you stay out of the markets ahead of the FOMC this week? So, US economy very resilient, which is obviously another reason we saw US markets rise yesterday. The S&P rose spot 63%, the Dow spot 68%, the Nasdaq spot 59%, so spot 6%. So very resilient economy. T-note yields obviously suggested support or provided support along with the resilient economy that we're seeing through US durable goods orders. I'm just looking at something about President Trump. That's my news screen. I mean, market-wise, we traded really nicely from that bullish move up, which we can break down. We'll break down all of the markets. I break down every market every day, so it's not too much of an issue. But once we had that gap fill, we were looking at the sell-off from this level. This sell-off came back into retest, 6,900? There's a lot of buyers up at around 6,900, you can tell. Still demand's overall in control. We flipped that we flipped that supply level, continue trading higher. So some nice levels. I didn't actually take a single trade yesterday. Far too busy. I was absolutely swamped with what's going on. Very busy, very active across the brokerage, which is a good thing. But markets are resilient, really resilient. I mean, it takes a big bullish person, a ballsy person is what I mean to say, to actually get short these markets. So, yeah, sorry. When people message you about work and you forget what you were talking about, that's the nature of this game. Always busy. Give me 1 second. So it takes a really crazy person to get short the markets. I know that we've seen, big boys come in and call their shorts, but anyone that's short gold would have had their face ripped off up until early this week. Same with silver. Anyone trying to short silver up until early this week that stayed out, got taken out of the position, would have just had their faces ripped off. And it's very difficult to short indexes. I said to you all the time, I really dislike getting short US indices. There have been a lot of shorts that have presented themselves that are decent enough, so we've taken them. But overall, this is me really just hedging out a longer term position. I'm massively bullish. I'm massively long the S&P. I'm massively bullish, massively long the US. So intraday gives us those short opportunities to pretty much exploit what's going on in the markets on an intraday basis. Statistically and probabilistically, we're playing an edge. We're utilizing whatever you want to consider it, a systematic, mechanical, discretionary approach, however you trade, to try and factor in what's going on. If I was to really look at where the markets are, headlines were definitely stolen by gold yesterday, which, again, crossed that psychological level of $5,000. Again, first time in history. Same for silver before the move yesterday. When you were buying silver last year for $30, not many of you would have believed it to be $100. Give me one moment. Yeah, you wouldn't have been thinking that silver's going to be rallying up to $100 within, or $90 to $100 within a year. You manage the positions that you're in with the expectations of prices hedging out or trading higher. You don't always expect a move to be parabolic. Just like when I and many other investors invested into Nvidia, for example, or certain investors had the opportunity to get involved in Revolut. Had you have been able to put $2,000 into Revolut when they were raising capital, I think it was 2018, maybe, when they were raising money, you could put a minimum of $2,000 in. That $2,000 as of last month would have been worth 1.4 million. It's just insane. It's all about having positions and managing the risk and holding them until you're proved wrong. Whether that's your stock's taken, whether that's the market rhetoric's changed, whether the geopolitics, economics, or there's a complete theme change. It doesn't necessarily have to be tulip mania or the tech bubble or the oil moves. It doesn't necessarily need to be a catastrophic event like the GFC or 2008, the 2008 GFC, or 2001 or 2007 or 2020. It doesn't need to necessarily be an event. Markets could prove you wrong at any single time, and that's okay. All right, so again, we were bearish unconfirmed. I mentioned that. Bearish unconfirmed. We needed this to hold and then break again. And once we see that break, we could then potentially consider ourselves bearish. We were discussing about buying the dips last week, whether that's if you're UK based, your SIP, your ISA, maybe your children's ISAs, so your JISA, or whether that be, topping up your brokerage accounts worldwide or some form of tax efficient account, whether you're in the US, etc. But I doubt many US citizens are sitting on this call because they can't trade CFDs as well. I say as well, when what I mean by that is as openly. There are very few CFD brokers that facilitate US clients. So yeah, I won't talk about US taxable accounts or US tax efficient accounts, even though we could do. So again, bearish unconfirmed. Market's now sitting up at that extreme high, which the target has always been 7,000 since the turn of this year. We spoke about 7,000 the whole time. And this high is trading up at around 69.97s. So, there will be a lot of selling interest up here. Equally, there'll be a lot of buying interest into the highs. So if you don't watch volume, I'd recommend watching volume because it will give you an insight to what's actually going on, the battle between buyers and sellers up at these levels. Now, as we come into lower time frame, we can see what's to the left. Price action gets a little bit clearer. We have all of our levels on this chart. So you can see that we're just continuously overlaying new points of confluences, new areas of configuration, and just trying to identify where we can get long from, where we can get short from, or where the market is going to get long or short from. From a CFD perspective, we do our best with volume. We can overlay it, like I said, with other futures indicators, be it the futures market, be it CME's bookmap, be it CME data, be it using bookmap or flow state, etc. So there's always those things to look at. 7,000 isn't far away. I think we could see it coming into FOMC. I'd like to say we could see it today, but with FOMC and the Fed decision around the corner, I think we're going to sit here. I think we might hold underneath this level. or we may flirt with it. I'd like to see it hit today. But what are we looking at? What are we up against? We've got this supply, which broke this low, so that was strong. We came back in. We respected that supply. This supply is in theory strong. Why? Because we closed below. So I'm just I was seeing if I had a spare indicator on the chart that I could duplicate. So we took this low. So in theory, this area is strong, which we're still trading inside. But there hasn't been a significant reaction. So if we zoom in, and I'll zoom in as best I can, so everyone should be able to see this. If they can't see this, you need to get a bigger screen, please. But you can see as we've entered in from this level here, there's no major reactions. We've pushed up. We've come into the supply to the left. And then we've traded up. So we've got a brief reaction. We then trade back in to react to that level. We trade higher, we correct through Asia session into late New York into early Asia. We kick in Asia, Asia takes it long, and then we range through the rest of Asia on. So Asia Open was very, very bullish. A lot of volume in the session, actually, which is quite surprising. Minimal volumes now, we're just holding between... We're holding between these two volume nodes, really. Which, wait, what color is that? There we go. It's because I'm on such a low time frame. I can't do that. Never mind. Such a low time frame. Nat. Okay, I don't know why that wasn't working. So we need to see some momentum, really. Well, it's 9:15 nearly. It's what, 15 minutes past 9. Point of control shifting. There's a lot of volume sitting in and around these levels, clearly. We're starting to break the low on this 4 hour. It'll get cleaner as we drift down. This high has been respected. This low looks like it's attempting to go. So maybe this next candle will get a short, which would be nice if we can get short. Let's do this. So let's look at this to be the next candle. If we can break I'd say this low. Then we could get a continuation to the downside. Obviously, we've got this big bullish Marabuso that engulfs that entire candle. It actually engulfs just about those previous 2 4-hour candles, so 8 hours worth of candle. If this following candle then respects this high, then we could get that sell-off coming into New York. But nothing done at the moment. Price is definitely starting to roll over and create around the top. You can see it. But again, similar scenario, right? Market was doing that here inside this level. So we had that rollover. We came in to retest that previous area of resistance, or previous area of resistance has now turned support. And we're coming into the extreme of the move, which is near the highs at 69.79 spot 1-2. So yes, demand is still in control. We're not looking for shorts, but we need to see price maybe pull back into something. What that level looks like right now is some point of demand. Now it could, and I know people look at this stuff, so it could It could come into somewhere inside here because this is that engulfing candle. This has got imbalance inside it due to the volume that's kicked in. So we have anywhere from we've got anywhere from pretty much here to here. And you can see that this candle's already interacted with the imbalance, so it may want lower. I mean, at this moment in time, it doesn't look like price is going to fuel higher. We need to see some volume kick in for that to be confirmed. Every time we have an inside bar, it looks very much like a spinning top, albeit it's not at the top. It's just a pure doji. So we need to really see what happens. This candle just looks like it's wanting to trade inside price, pure low volume or balanced volume, should I say. No one's really got the strength to take it higher or lower at this point. So I'd like to see it pull back, if I'm going to be honest, to about 69.5 and fuel that move from 69.5 into 7,000s. Once we break 7,000s, maybe we start tacking 7,100, 7,200, etc. That's what I'd like, because I'm so long. We've just been stuck in this range. Let's see how the lower time frames look from an intraday perspective. Let's see if I could have actually got in any trades yesterday. Did anyone take any longs in the S&P 500 yesterday? Be that CFDs or futures? Let me come down lower. Let's go to New York. So what I tend to do, for those always watching or those that are wondering, European hours, I'll switch to European hours. When it comes into New York, I'll switch to -5. And that's purely just for ease. The data I look at is all US based. The pricing I look at on book maps, all -5. So it's just having everything succinct. Everything is done methodically. So early hours, and then we had this area of supply. Which time is this? So this is pre-New York. So this is pre-New York. We traded in. We looked to trade lower. We failed. We swept that previous point of demand, which is a confident sign that we're going higher. I'm just going to keep these levels as thick as I possibly can so that you can follow along. The supply then failed, so that flipped. We've traded higher. 9 a.m. Huge move. Huge move at 9 a.m. Couple of things you can do. There's a couple of strategies that basically trade the bounce. Doesn't mean you need to take all three. And it's something that a good friend of mine, Brad, and I used to talk about all the time, which is like a Dorito, right? It's just a layman's simple comment. It's not a technical term in its purest form. So it's obviously a breakout, retest, continuation, breakout, retest, continuation, no breakout, retest, continuation, so on and so forth. So what you're looking for is essentially price to trade up, trade down, retest something. And essentially it becomes a triangle. And he made the word up, Dorito. And it's just something that reminds me of things. But it's just a nonchalant word that allows you to follow along price in a very non-technical term if you need to explain it to someone. So if you say breakout, retest, continuation, or breakout, retest of a specific level, it's quite, for a newer trader or a beginner trader, it's not the most straightforward. And if you need some form of analogy or easier definition, that's where that comes from, really. And it's the case if we've got, New York open at 9:30, we're trading above New York's levels, we've got bullish momentum, we retest this and we reject it. So in theory, how you'd enter this trade is like this. So you'd enter that, your stop can be wherever you want. You know, you're running up 1 to 1. There you go. 1 to 1.5. There you go. And you're always looking for those initial moves. One thing to stress is the earlier on in the level that you get that kind of level test or that Dorito move is better. The later it goes on, or the later the move goes on, the harder it is to trade, the more failures you get. So on a probabilistic level, it's best to take it earlier in the move than it is later, and I'll explain. So as we come along, this isn't necessarily the same, but how some people would try and trade it is they would actually look to get in somewhere in here as well. But whether they're entering at the level or whether they're waiting for a high to go like this, and then they would have been executed here, stop below the low, and then obviously been looking for that to trade higher, is their execution methodology and entirely up to them. But you can see you've got these kind of moves that are continually occurring. Obviously, it doesn't retest there, so you wouldn't get involved. You're already in, so now you're just managing your trade. You may even just keep trailing your stop underneath this level and running that move and massaging the position as long as you possibly can. Now, similar scenario again. You know, it has to be in line with structure. It has to be in line with momentum. It has to be in line with order flow. You do want your confluences from some form of support or some form of moving average. And you also need to factor in volume. So it's never a one-size-fits-all kind of methodology. And I don't think trading's ever been like that. People always talk about, oh, I'm going to trade a moving average crossover. No one ever trades just a moving average crossover, ever. In a million years, probably, but never. It's not a thing anymore. And the same scenario here. So if you were looking at trading something like this, and you're looking at, okay, where can I now have things line up to either get out of my position or consider shorts? And again, you don't really want to short indices that are bullish, right? You don't want to short a bullish market. Doesn't matter if you buy a bearish market if you're looking for long-term holds, but you want to time it a little bit better than just buying the market, unless you're just averaging in every single month. If you're actually an active investor, you wait a little bit longer, you time it a little bit differently. If you're a semi-active passive investor, you're a bit different in terms of how you get involved. So similar scenario, you know, we've got these reactions off these levels. We could have got in here. Stop, again, may have got taken out. You may have had it above here. I don't know where you're going to put your stops. Up to you. We then close back down. What I don't like to do traditionally is trade shorts above New York unless I'm trading into the level for a retest. But usually if you're above New York, you're long. If you're short, if you're under New York, you're short. So once we've broken down, we've retested, we've got, again, the breakout or breakdown, retest, continuation. So ignore the continuation because that comes after the fact. But we have that Dorito move again. Now we get that Dorito move. Depending on how you're trading, you may get in, I don't know, here. You may get in here. I personally would have got in about here, and I'll explain why in a moment, but let me just give you some clarity. I would have got in there, look. Perfect. So and I've always said this, and I'm true to my word all the time. I would have missed this, and I'm not bothered about it. You know, had I have got in, the earliest place that I would realistically get in after this level, after New York, wait, New York's here. This is pre-New York, so I wouldn't have got in. So the earliest I would have got in is there. So I would have been in a little bit higher. So let me just show you on an RR tool. So the entry from the initial idea that I suggested would have been here. The entry from and where I would have entered. Oh Give me a level. Come on. There we go. I would have entered about 0.2% from that. So the market would have been 0.2% higher when I got involved. I would have taken a little bit more drawdown than the idea that I suggested. But that is okay. In the same scenario right here, now I don't mind getting involved in later in the move. So you would have got involved here. Your stop would have been, I don't know, wherever. You've got your 1 to 1.5, which is a nice little RR. I would have got involved about here. Again, I'll keep that like that. You know, RR isn't necessarily there. New York VWAP. You could have had your stop above New York, which gives you your 1 to 1 on your half. Obviously, had market retraced, I would have been stopped. Eventually, depending on what you were holding in that short, you would have been stopped as well if you were holding into the close. But again, with CFDs at Seacrest Markets, you can obviously hold overnight. You have to factor in the swap charges. If you're trading futures on prop firms, then you would have had to close out over before close of play anyway, depending on what times your CFD, your futures prop firm tells you anyway. A short-lived move, you know, so this is again scenario. You would have been short the market in a bullish market. So it's very difficult. Let's come out a little bit. So obviously we got that move, you know, overnight in Asia. I don't trade Asia. So those of you that trade Asia, very, very efficient price action here. Very efficient price action going into Asia through the rollover. We then trade into Asia. We have a rejection. Pretty much off of just the extremes from the left, right? So nothing too significant. We then fail with demands in control still, supply fails, trade higher, and then we start to break down. So it takes a brave trader to get short. Nothing in this left leg has been broken, so we're shorting based on front leg moves only, which could just snap any minute. There's been no confirmed bearish shift in price action at all. You know, we haven't taken anything out to the left. Left of the leg is still intact. All we're doing is basically trading inside on that front leg, which means, yes, price is fractal. Yes, it could be breaking down from the lower time frames on an intraday basis. I'm waiting for New York. But overall, it's just a bearish front leg. It's not taking into consideration structure on the left in its truest form until we get to here, which obviously we're only here at the moment. So failure to break, which is a sweep. That high got taken, but price wasn't strong enough to take out this high, which we rejected. We then, so let me just do this. We then traded below. This got swept. This, again, it's not strong enough. This should have gone, but it wasn't strong enough. This got respected. We then shorted. So had you have wanted to be short through Asia, coming into pre-European, pre-London session, same thing for me all the time. You know, I'm shorting. If I'm shorting, I've got a target realistically into something on the left or into some form of confluence. I would have been short there. And this is just, I'm just checking the level so I can see. I would have been short from there. Stop would have been above the highs or maybe above this high. It depends on what was the spread at this time at 3 a.m., you know. And I would have barely made 1R so far, and I'm sitting in this move. So opportunity cost, if the trade isn't moving, what do? Do you just continue holding? Do you take out opportunity costs? Up to you. You know, let's for the sake of this experiment, keep holding this short. There's no point getting out. It's just an idea. It happened in Asia, so it doesn't matter. Point of control is still floating around around this level, so this does suggest to me that volume is holding this. So use that information as you do so wish to. I'm just looking at something on markets. So a lot of yesterday's move was a lot of investors basically rotating into mega cap tech ahead of earnings. So I discussed on earnings with you yesterday. So if you wasn't available to watch yesterday's live and you haven't watched yesterday's recording, definitely go back and check it out, because we discussed the earnings for this week from some of the big tech boys, which will, based on their weightings, will have a significant impact on the US indices. European indexes, the DAX and the FTSE, were supported by mining stocks. So Fresnillo, Antofagasta being two of the bigger ones. Well, let's have a look at Bitcoin. We'll leave that to do what it is. A lot of rotation out of Bitcoin yesterday into gold ahead of the Fed, which you can see in this entire move. Pretty much we've started to rotate out. So a huge move to the upside. Lots of profit taking in around here. We've started to rotate over, which is in line with the analysis that we've been talking about the whole time. Breakout, retest, continuation, breakout, retest, continuation. We come back in to retest these levels. We're trading off at the moment. We're struggling to come back inside that ascending trend line support that we previously had, that we were monitoring, with the view that if this level holds, the expectation would be, 102,000, with the target being by June potentially 132,000, I think we were talking about. But that level failed. So that idea at the moment has actually, that ship has sailed, is basically what we want to say. This just looks like we're going to continue at the moment breaking down. Is this rotation out of Bitcoin into hard stocks while tech earnings are on, and into hard metals? Big mega cap stocks are going to definitely see a lot of flow going into. I mean, I'm sure there's some people on lower time frames that are absolutely trading this right now, if the spreads are good. So you can see in this leg, we're actually creating, not only trading the front leg, but we're actually taking out levels from the previous leg that is then being respected. So demand failure, supply, trade down. After this rejection, there's definitely an availability to get short. So again, during Asia, which I actually wasn't sleeping at. Oh no, it's not Asia, is it? My apologies. Give me one sec. That's bad of me. 1 second. Oh, so this was actually European Open. This makes a lot more sense now while the volume was kicking in. So coming into European Open, 7:45. Obviously post Frankfurt. There's a trade. That's a really nice short if you're looking to take advantage of the weakness in Bitcoin. That move was 7:30. So yeah, into the open, we've traded higher. Buyers have been trapped. Shorts have stepped into the markets. So until we can build structure to the right, I remain on the short side of Bitcoin. I remain obviously long the indices, even though we're starting to see some rotation and roll over. I remain long gold. Silver had a bit of a beating, which we'll talk about in a moment, but it's up. So Let's have a look at this. So this is actually perfect. So of course, a couple of weeks ago, I spoke about the ascending wedge and how it's usually and traditionally a bearish pattern. And there are multiple scenarios, but this is actually played out to a T. So I don't know if any of you are watching from previous lives. I can see quite a lot of you across the streaming channels, be it Instagram, YouTube, Facebook. So thank you very much, all of you, for joining in. Whatever channel you're on, it might look like there are only a few, but there are plenty across the other platforms. So it's nice to see you. Thank you all. So we've had that breakout. We faked that move. We tried to trade higher. We didn't. And we just drifted. We continued drifting. What's then happened? We've broke out. We've retested, and we've traded to the downside. We failed to reclaim higher prices at this moment in time, right? That's what we've got, like this. So this is perfect. Really is perfect, because this breakout here is where the levels come back to retest. We've then taken out this area of demand. Yes, we've held this one, but this one's been taken. So now we want to see, okay, is supply going to hold, or are we going to sweep it? Looks like it's almost equal highs. We won't go into the integers of that because it could just be the same. And then we look for shorts. You know, gold, it takes a brave trader to short. But obviously, if you've got all your technicals, your intuition, everything aligned, and you wanted to take it, you know. There's no harm in taking it on a Monday. You've not got weekend gap risk to factor in. We've come into New York, you know, New York, late New York. European markets are closed. US traders have taken it lower. That's a lovely trade. Lovely, lovely short. Now, depending on how you managed it, it's come back to your entry and almost to your stop. But overall, that pattern there was textbook on this particular trade. You then overlay it with additional confluence. Where's volume? What's price action doing? What's market structure doing? What's momentum saying? Where have we got some levels that are breaking? And this all comes into play. Like, if I give me 1 second, let me go back to New York quickly. Oh, my neck. I think I'm addicted. Da, 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 da. All right, so, oh my God. Perfect short. Perfect, perfect, perfect. This is absolutely perfect. What a perfect, perfect shot. Wow. What was this level doing? Okay, so it was the failure of this. Wow. Did anyone get short gold yesterday by any chance? What a short. What a short. Wow. Wowzers. All right. Fine. Fine. So, again, we remain short at this moment in time until the market tells us otherwise. So inside here, we're still short. If we were using resistance or supply, then you would have been looking at this supply. You're looking at targeting this low. You've got 2 levels to pin from. You're below New York, remember. Would have got in here. Stop would have been above. Targeting the low originally for 4. Had you just been targeting 1R, 1.5R, 2R, we don't get 2.5 unless your stop's tighter. But other than that, there's a 1, there's a 1.5, there's a 2R there. And many traders like those, and that's okay. I'm just going to give you all the color and the flavor. So there's 2 shorts minimum in there. 2 shorts minimum in there for you to take advantage of gold yesterday because the market broke down. It takes a brave person to get involved in it. But if you're looking at lower time frames and factoring in the highs and the rotation and the roll, then wow, well done you. So coming into early hours into Asia, we failed to take the low. So unconfirmed at the moment, but price is looking like we're going bullish. This high is weak. Why? Because it failed to take out this low to the left. We could see an overall shift in market structure and momentum. What happens? The high goes, we come back in, we retest imbalance or retest area of resistance that's now turned to support. We then break higher. It's a bit shallow, but there's still opportunities to get long if you want to. You know, we've got demand in control, so anywhere along here you can start buying. Your stop would be protected anyway because you're gonna realistically put your stop below. Similar scenario, you know, you're looking for longs. What time is it? 3:30 UK GMT. So you're in here. Your stop's below realistically. Look, if you're being a prick for a tick, your stop's going to be below this low. You would have been stopped down. If you're going to put it below some form of confluence, you know, like that, then whatever, you know, you're still in. You get your 1-to-1. You don't get your 1.5. You get 1.25, give or take, and you're still in this trade. But bearing in mind, people want $6,000 a troy ounce for opens. Right now, it's at 5,000. Now it's at 5,000. You want 6,000. So, you know, if you're just adding to your gold position and it's not, or you're just using the CFDs to buy spot and you're buying actual physical, then, or you're buying an ETF, then that's fine. You're just timing your positions better. I'm going to have to delete all these charts because it's getting messy. But then we have a break to the upside. You know, I wouldn't have got in this. I'd have been looking for something in this leg, but it sweeps that, trades higher. So yesterday and today, 3 trades on gold at the very minimum. If you understand how to read structure, momentum, order flow, volume, it's all there in itself. And these are things that we call time and time again. From an idea perspective, we discuss the analysis. So spreads on gold at Seacrest Markets are very competitive. Swaps very competitive. Commissions very competitive. You know, up to 1 to 500 leverage on the broker. So many traders will have taken advantage of it. On the prop side, you know, gold's our most traded instrument. So covered the US indices, covered gold, covered Bitcoin. Let's take a look at the DXY very quickly. It's best to look at the DXY over any major or cross, in my opinion. Wow. So I haven't touched this or looked at this since we last spoke. Sorry, I haven't altered any of the analysis, should I say. So we had that sweep of that level. The sweep has matured, so we've taken out this level. Man, the dollar's getting hit. A couple of levels we potentially want to be aware of is this sweep. It took out that high. So we're trading inside that level now. Now, this could be where we start to see a recovery in the dollar. let's wait and see till Fed FOMC. I mean, it's trying. It's trying. Look, you've got essentially what they call a dragonfly doji, followed by another form of doji, which it's not a buying indicator in most forms. It's just a correction in the market. So on a lower time frame, this is going to look like a range, okay? And most of the time the market ranges. And we'll go down to the lower time frame in a minute to see that range. But these show indecision. It doesn't necessarily mean we're going to have a V-type reversal. It could just be, you know, very corrective, very rangy, and then it could break to the downside, or we start to see maturity to the upside in the front leg. Coming down into the M15 on this level, just to show you the range. There's the range. You know, we are trading inside this range. And what's happening? Highs intact, lows intact. We've then created demand in control. Highs now being respected. We want to see this logo. If we're going to look for longs, we want to see this long. We want to see it realistically hold that level. But it could, because it's a range. Both sides are weak, even though we've got this. We could just see a move deeper into the level before we base. It happens a lot. So let's wait and see. But that was just to give you clarity on the range. Overall, you know, price has played out to exactly what we wanted to see. And this is exactly how we'd look for it. After the sweep, we'd be looking at demand failing. Demand fails. We get back. We get a pullback. Not the greatest of pullbacks. It just pulls back to pretty much mitigate the range of price, which is this range here. And then we fail. We trade lower. You obviously can't trade the DXY through most CFD providers in general. So you'd be looking at going long the euro on this scenario. So again, if I was to, if I was to, I'll try and do it next time. Oh, actually, I'll just do it now. There you go. Look at the inverse correlation on the euro versus the DXY. As you know, euro forms up 57% and a few pennies to the and a few percentile to the DXY. So if any of you trade euro, it might be best that you overlay the DXY as your comparable, just so you've always got it on your chart. That way you can see how the dollar index is reacting to your euro positions, and it'll actually give you another confluence. People always just look at market structure, volume, and that's fine. But if you're doing something like the euro, if you were trading FX, the way you want to do it is have these two charts on your screen. Not necessarily so much for cable or other majors that are obviously forming at the DXY basket. You can, no, we can show you. How has it done that? So you can see all of them. So you can basically see how the market overall plays against them. And if you, so let's pick, I don't know, let's just pick this area. There you go. Perfectly inversely correlated. And that is really how you want to be trading and monitoring the correlation of assets, or the correlation of FX crosses and FX pairs, specifically utilizing the majors with the DXY basket. Like, you don't really want to be putting something like this on there. It's the worst currency to trade, may I add. It's just shit. It's actually almost as bad as trading the Aussie dollar. It's actually worse than trading the Aussie dollar. You could say Aussie dollar's as bad as trading euro sterling. But if you are just focusing purely on the euro, then it is perfectly inversely correlated to everything you want to do. Are there any more questions? Any questions at all? Any clarity, any confirmations, any communications, discussions that you want to have? Please feel free to make any comments, ask away, or I'll wrap up shortly. If you're not following any channel, please follow, like, subscribe, any Seacrest Market content, social media channel you have. Turn on your notifications so that you're aware of every live session, every piece of recorded content that comes out, be that funded trader interviews. Note, obviously, that there's 100% deposit bonus opportunities at Seacrest Markets. Keep an eye out on that. Keep an eye on special promotions, special programs, and any feedback. Let me know what you want. Let me know what you're looking for. Let me know how I can provide more insight, more information, more excitement. Because the markets are boring, and I think people forget that. It's not jumping around a room screaming, buying Pokemon cards and all that jazz. Investing is fun, but it doesn't have to be childish and immature. So, but yeah, if you want, give me feedback. Let me know what you're looking for. Let me know what you want. More education, more analysis. We obviously can't necessarily execute trades because of the licensing and the regulations. We have to be very careful, make sure that we're compliant all the time, because we do not want to fall foul of anything like that. But let me know what you want. Let me know what you're looking for. Let me know how I can help you in your trading journey. And we will do that. We will make sure that we help you continuously improve, whether that's your knowledge, your analysis, your ideas, helping you to refine areas of execution, taking into consideration ways to get involved or how to get involved, whether that be types of executions, whether that be difference in navigations around platforms, or whether that just be questions about our brokerage, or any general questions about the markets. Anything you have, whether you're listening to this live or whether you're listening to this post-record, please drop your comments and feedback on the available channels within the available comment sections, and I'll make sure that I'll read all of them and get back to you. But have an exceptional trading week. Remember the Fed FOMC tomorrow. Remember there are earnings if you're trading indices. But as always, trade safe, trade smart, trade Seacrest, and I'll see you same time tomorrow, 9 a.m. UK GMT for this week only, Monday through Friday. But have a great trading week, and I look forward to seeing you tomorrow, same time.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets light in the dark.
Seacrest Markets leading the way, making the move every single day. Charts in the vision, mindsets aligned. Traders power, no fear behind.